Okay, good afternoon, traders. Good afternoon. My name is Raul Rivera. I am the founder of themarketprofile.com. Today is Thursday, August 24th, 2017. Let's get started with today's market profile review. And today we had a pretty interesting day. Nothing too crazy occurred. Let's take a look at the S&P 500 futures here. And as you can see, let me go ahead and cancel these. No real reason for me to have these orders sitting here overnight. Really? Come on. There we go. Okay, so looking at the S&P 500 early this morning, we were trying to bracket the market. We know that tomorrow we have Mario Draghi and Janet Yellen both giving speeches at the Jackson Hole Symposium, and thus it can bring a little bit of volatility, but also as the market anticipates whatever comes out of these central bankers, it's going to keep us in a trading range, and that's kind of what we tried to play for today. So looking at the S&P, we were really only trying to short just above the high and just below the low at specific levels of value, and we were looking at 52 to 54 to the short side. As you can see, the market almost had it in it. I think it traded as high as 48 on the dot, or maybe just a couple ticks above 48. So we were trying to do 52 to 54. Usually 2450 is where everybody's shorting. They usually try to run a few stops above 50, and that's kind of if it isn't just perfect where value was in the market right there, 2452 to 54. So we were trying to sell short. And to the long side, we were looking for 32 to 30, and we almost thought we could get it. At one point in the market, for some reason, and I think it had to do with Jackson Hole, it's not just central bankers, it's also scholars and economists of all kinds, and here we can see that the S&P 500 just suddenly took a dive to the downside and then just continued to distribute, pretty much continued to create value. Little drawing tool did something crazy there. Just continued to create value pretty much for the entire day. So almost got to the area we were looking to short, not enough volatility. Almost got to the area we were trying to get long, not enough volatility. So we ended up not being able to take a trade here. I like to take trades at specific areas where number one, value is located, because what's the point of using the market profile if you're not going to analyze where value is located in the market? And number two, I like picking areas where I know there can be some kind of resistance good enough for a reversal back down to the mean, right? The volume of everything distributes over a mean over time. Trading volume is no different, right? So if we can find the area where it'll reverse back down to the mean, I think that's work worth doing, worth doing, and also areas where to the long side where I think there's going to be a reversal, and it's not pretty much where I think, it's where the market profile is telling me there should be some sort of reaction. Not enough volatility here in the S&P 500 to pretty much get us to move lower or higher. But the idea was correct, and the idea was that, with the Jackson Hole Symposium coming up, Janet Yellen and Mario Draghi, that we're probably not going to move higher or lower. And if we do, it gets sold at the highs and they buy it at the lows. But mostly it did get sold at the highs, but pretty much, a couple of ticks just above the highs. And then they sold it off very quickly. They didn't really give it much of a chance to trade higher. Today, crude oil. So this one was my only trade of the day. I only took one trade today. I tried getting long gold, 30-year S&P 500. I tried to take both sides of the trade in those markets, but not enough volatility. I mean, even in gold was an inside day, but I'll talk about that in a second. Here, crude oil was also an inside day, and this one is so strange. You think crude oil, and then you take a few trades and you realize that you don't. So crude oil, my profit for the entire year of 2017 70% of all of my profits have come from crude oil. Okay, so I've done pretty well for myself trading crude oil um, since the beginning of the year. But this month, it's not only the indices that have me have my account going a little bit crazy, but also crude oil. The things that I know best are also not behaving the way they should. I mean, look at the volatility in this market. I mean, how many more days? I mean, we got this day here from high to low over 1 point. This day from high to low over 1 point. This day from high to low over 1 point. The day directly after it, 1 point. Here about 90 ticks. Today over a point. Crazy, crazy, crazy movement in crude oil. I mean, where is all of this coming from? Now today they're blaming it that the crude oil markets are moving lower because of the hurricane that's about to make landfall in Texas. But that it really doesn't make too much sense to me, because if and this is true, refineries all over Texas are closing down. So if no one is producing crude oil, and no one is refining crude oil into gasoline, for next week, we're probably gonna see a very, very big inventory draw in both gasoline and crude oil, right? Both gasoline and crude oil. We've had 4 straight weeks of inventory drops in crude oil, and the reason I talk about this is because crude oil is a commodity, right? It's mostly driven by supply and demand. We all know this, right? We all know the supply and demand curve. More supply is equal to about less demand, and more demand equals almost less supply, and there's a curve to it, right? This would be supply, this would be demand, right? And or this could be demand, and then this could be supply. There's a relationship between the two that if one is larger than the other, something happens with prices. So if, for example, we have more supply than there is demand, prices go lower. And if we have less supply, and that should increase demand, prices go higher. And this happens all the time. I mean, it even happened with Tesla. When Tesla first came out with its cars, the Model S, people would buy these cars for $95,000. And because the demand was so high, people were willing to buy a $95,000 Tesla from someone who already owned it for $100,000. Right? And that doesn't make any sense, because cars are a depreciating asset. But when there is no supply and high demand, the price of something goes higher, right? If we had Teslas everywhere, nobody would, as soon as you drive off the lot, the value of the car just goes down, right? Because there's just an overabundance of it. But if if there are only 100 Teslas out there, and there's demand for 80,000 of them, these 100 Teslas are going to be worth a lot more, because there's just that much more demand. So until you can flood supply, the prices are always going to remain higher, because the demand is there. So same thing here. We're not producing crude oil. Okay, we're shutting down the refineries. We're not producing gasoline, right? Gasoline is a byproduct of petroleum, which is the same as crude oil, right? So if we're not producing gas, we're not producing, we're not refining crude oil. Why are crude oil prices falling down, right? This is strange. We're taking supply out of the market because of a storm. How are crude oil prices moving lower? It beats me. I don't know. But there was a funny joke. OPEC for years now has been trying to stabilize crude oil prices and lift them well above 50 a barrel. And the joke around the social media was that not even Hurricane Harvey is able to help OPEC in the short term, because the hurricane is driving crude oil prices lower. So I think that's the catalyst for today's trading. We can see that towards the end of the day, institutional traders are actually taking advantage of these low crude oil prices and actually buying into them. They started the buying at the very lows, and when we look at the hybrid view, something that most of us will be more familiar with, right? The candlesticks. We can see that right off the lows is when they started buying, and they were just non-stop, non-stop, non-stop. I do anticipate that maybe crude oil gets a decent bounce tomorrow, but who knows? I don't think investors are going to be paying too much attention to crude oil more than the S&P 500 currencies and bonds and gold. Okay, those are going to be the major assets to really take a look at tomorrow as the speeches from Janet Yellen and Mario Draghi loom. So today we had an inside day here in crude oil. Early this morning we were trading sideways, so I was looking to short 50 to 60, 48, 50 to 60, and I was looking to get long and did get long 48.10 to 48. The idea was correct, but literally it was good for about 5 ticks. The last, the highest tick that I remember looking at this market. Didn't last long. We fluctuated here for a little bit, traded lower, consolidated some more, and took my stop for 20 ticks on a 5-lot trade. So it was, another rough day for me, and but only on just one trade. Everything else I had in place just did not get filled. Sometimes the market does that. There's been days where, in fact, back in June, I believe I had just literally 2 days in a row where I didn't take a trade. But that's okay, because I believe that you should let the market come to you, not chase the market. I believe in not taking trades just because there is an opportunity, right? If there is an opportunity, why am I just going to take a trade? It doesn't make sense. It saved me before in the past, but this month is different. Fundamentals in the market are just really, really weird. And something, like this, look at all these days, all these past days where we've had just humongous ranges in crude oil. It's, it's something we haven't seen at all, right? Go back to past months and you'll see, these ranges in crude oil are about a point, but they're not over a point every single day or within, the same span of inside the same month. Pretty wild swings that we're having here in crude oil. So I got long there, trying to get long just under value at the single prints letter A. I got caught in a range extension on that one, and we continued to trade lower, and I decided I'm not going to add to any of my positions. That's what hurt me in the past with the S&P 500. I've learned my lesson. I'm going to take my trade. If it works, it works. If it doesn't, I'm not going to continue to add to it in bits and pieces of hope that I could at least, buy at the lows and, try and see if the market can come back higher. Belief and hope doesn't do it, but you can't really blame me since January from July, they've bought the market at the lows almost every single day, and suddenly in the month of August, they're not doing it. So, I've been conditioned to this low volatility market, and it's, now it's all about adapting to high volatility. But crude oil has always had volatility and range, but I feel like it has a lot more of it now, and it's driving prices a little bit wacky here. Looking at gold, another inside day. Now it's starting to form what I like to call a Russian nesting doll pattern, because we have a previous high and low, we have a range that's trading inside that previous high and low, then we have a range that's trading inside that previous high and low, and then another range that's trading inside that previous high and low. So it's one of those, nesting dolls that, you open it up and there's another doll inside of it, and then you open that one up and there's another one inside of it. This is kind of what's happening here with gold. Inside day after inside day after inside day. We have 1, 2, 3 inside days in a row, which doesn't typically happen too often, but hey, it's happening now. That's all that matters. More importantly, it's looking at the institutional traders, okay, the 20 lots and greater. I think gold might be headed higher. In fact, if I can try and catch a trade down by the 1290s, I think I'm going to keep something for as a swing trade, maybe 2 contracts, trying to drive it all the way up above 1300 and maybe 1310 to 1320, because I think that's where it's headed. When we take a look at the 20 lots and greater today, what were they doing? Buying. Yesterday, they did nothing, very quiet. The day before that, on the 22nd, they were buying. On the 21st, they were buying. On the 18th, they were buying. On the last Friday, what they were doing? They were buying. So this is a staple of just institutions pretty much building a position, and we're able to see that using our cumulative tick volume technology. We keep track of every single 20 lot trade or greater, and we could also differentiate the difference between buy volume and sell volume. Obviously, positive and green bars means more volume was on the buy side than on the sell side during these 30-minute periods, and in red, more selling than buying during that 30-minute period. But when we look at it in a cumulative mode, or just in a form of accumulation where it just continues to build and stack up, we can see that these guys are buying as the market is consolidating. Okay, so we have like a little bit of a wedge going on here. Okay, so we could either play the breakout, okay, or trying to buy the bottom of the wedge. And I think that's buying the bottom of the wedge or lower is probably the key way to trade this one. Hopefully it's not too late and they don't break it out tomorrow. I mean, poetically speaking, tomorrow would be the day to break it out, because we have Janet Yellen and Mario Draghi speaking. But I'm definitely looking and liking the long side here in gold. Institutional traders are building a position to the long side. It's definitely not short covering, because who in their right mind is getting short and you're telling me they were short on this day and then they're just short covering? No. You're telling me this day they're short covering? No. I mean, the market is continuing to trade higher. It's definitely not short covering. It's just continuation of buying. And we happen to be at the highs of a 20-day distribution, right? We're just continuing to consolidate sideways, just this week. So I think gold is going higher. Today I tried to buy gold just under the low of the day, 89 to 88. And I tried to sell short 98 to 99, and then I tried also 1300 to 1301, which is this level here. But of course, the market remained pretty bracketed as the institutions continue to build a long position. Okay, it's pretty obvious that's what they're doing, building a long position. So keep an eye on gold. I think gold goes higher. Looking at the 30-year, this one I tried to do the exact same thing, but a little bit different. Switching over to profile view, I was taking a look at a couple of interesting areas, splitting the profiles into pieces here. We found, we got some value here. We also have value up here. When we break a couple of these apart, we also find that we have value in those areas. Here, this D followed by a P. We got a little bit of value right down here. And then this one is a B followed by a B. Let me see if we can split it here correctly. There we go. B followed by a B, and we have a value area here. So I was actually trying to get it long 26 to 20, I believe this was. 26 to 20, I had an order at 24 and at 20. But I was trying to get long 26 to 20. Value area, value area, value area, value area, and a value area high right there. So plenty of levels that can support the market. We broke right through that level here yesterday on a range extension, which means there's definitely buy side power. And if we come back down to it, we're going to have to at least find some kind of support. And if the market doesn't like it, then they can come back, retest it, and then take it lower. But we were trying to capture that first move, right? That first test of support before the bounce. And as you can see, I mean, the market just very, very quiet today. Nothing really spooking the market, nothing really making it rally. When we take a look um, closer here, I mean, look at the price action. It is just boring, sideways, and all over the place inside of value here. Um, 50 lots and greater, they ended up selling towards the end of the day. They were actually buying at the beginning of the earlier this morning. Total imbalance negative 1600. That's very, very little, right? Because the 10-year, the 30-year, the bonds, they trade a lot more volume than the S&P 500. Okay, the bonds trade a heck of a lot more volume than the S&P 500. And today we're actually seeing just negative 1600 and negative 654 from the institutions. That's pretty small selling on both sides of the market, on both institutional and non-institutional traders. Let's take a look again back here at the S&P 500, and we can see that we had negative 21,000 contracts and about negative 4,000 at the very low of selling volume in the institutional order flow. So, coming back up here to the 30-year, we really didn't have all that much selling nor buying. And I think that also kept the market bracketed sideways. Trade, just behaving sideways, not really doing anything, not trying to make new lows, not really trying to make new highs. And, it's tough to trade in these kinds of environments. There's certainly plenty of strategies out there to try to trade and maybe scalp a couple of ticks or something like that. But when we're trading the market profile, what we try to do is to make as much profit as possible with the least amount of trades. Okay, most profit as possible with the least amount of trades. If you're trading with the market profile, you're looking for home run trades. You're not looking for base hits. You're really looking for home run trades. You want trades in the 30-year from 10 to 28 ticks. Okay, it's possible. In gold, you're looking for trades of 3 points to 10 points. In the S&P, you're looking for about the same as gold, and in crude oil, you're looking for trades of 40 ticks plus. Okay, we're not interested in 10 ticks. We're not interested in 15 ticks. We're really looking for the home runs. And the way to hit the home runs is to locate value and place your orders at those specific areas of value. Now, obviously, the month of August has been, a little bit of a tailspin, I guess you could call it. It's been a little wacky, but January through December, and also last year, January all the way through December of last year, January through July of this year, I've been profitably trading and making some really fantastic home runs almost on a every single day basis. The possibility is there, but every single trade and every single trader, we just go through funks, and so does every single strategy. We could all agree on that. No one has the perfect strategy, and every one of our strategies always goes through a little bit of a funk, is what I'm calling it, and I'm going through it right now. So hopefully I can get out of it very, very soon, so I could get back to doing what I do best, which is trading the market profile. At the moment, just struggling a little bit, but the trades are there. We just need that little bit of volatility to get to the areas I'm trying to buy and sell today. Like I said, just a one single trade with a world of possibilities of trades to be taken. It definitely says something about today's markets and how pretty quiet it was. Other than that, guys, I would really like it if you guys, extending an invitation to everybody, visit the website www.themarketprofile.com and claim your 14-day free trial of the live trading room, where you can watch me trade all of these futures contracts plus more. You can watch me place trades. I teach how to use the market profile and how to locate value using distribution, pretty much using statistical methods of data analyzing. Okay, that's what we're doing every single day. I know it sounds like super hard and scary, and maybe you don't understand what you're seeing here in front of you. Let me teach you. Let me show you. This it's really not a new way of trading, but for you who have not traded the market profile ever before, let me teach you this new way of trading. You might actually like it, and you might actually find it somewhat valuable. And if not, no harm, no foul. You tried the 14-day free trial. It's not for everybody. But if you are serious about trading futures, definitely swing by, claim your 14-day free trial, see if this is something for you. Also, if you like the video, go ahead and click like on Facebook. And if you have any questions or comments, definitely leave those in the comment section below. Everybody, I hope you have a great rest of your day, and I will see you all tomorrow.